Hi, and welcome to this episode of the Insurance Experts. It's my pleasure to have on the line again Les Robinson. Les is a long-term care insurance specialist. Les, thanks for joining us today.
Hey, Mark, thank you for having me back.
So today I know we wanted to talk a little bit about the partnership program and Medicaid planning. But first of all, why don't we start off by saying, what does Medicare cover for long-term care and what does Medicaid cover for long-term care?
Real simple. Medicaid will cover up to 100 days of a skilled care facility, and they will not cover you for home care or custodial care. That's the big thing with Medicare. Medicaid is basically you have to spend down your assets to a certain limit, and then that state will pay for your nursing home or assisted living care.
Right. And I think there's this misconception out there that Medicare pays for it, and really they pay the first 20 days and maybe 100 days, but it's very limited. And what is Medicaid? What are the requirements for qualifying for Medicaid to pay for long-term care?
Very simple. You have to, right now, you have to spend down to about 125,000, 3,000 a month, one house, one car. And that's basically it.
Yeah, and it's different in different states. I know Les is in New York, but works in many different states. So you do have to, it's a state-specific Medicaid program.
I have my little cheat sheet for each state. So yeah, that's for New York, yes.
Okay, so let's talk a little bit more about a client case study where you've actually experienced, seeing this firsthand. I know it's a personal case to you.
Yes.
What exactly happened in your family?
Real simple. About a month and a half ago, wife had surgery. The day after surgery, couldn't walk. And if she didn't get any better, my wife would be in a nursing home. And I realized that because I have a New York State partnership policy, I was going to be able to keep all of my assets. I was not going to impoverish myself. And I wouldn't be working the rest of my life to pay for my wife's care. So it was a win-win with having a New York State partnership policy versus having no partnership policy. So if I did not have a policy and my wife ended up in the nursing home, I would be eligible to only make about $3,000 a month and have $125,000 in assets. And basically I'd be working now until I died paying for my wife's care.
Yeah, and so tell us a little bit more about the foresight you had here. You bought a New York State partnership long-term care policy. What exactly does that mean to have a partnership policy?
I've partnered with the state of New York and Medicaid. So basically in New York, it's a little bit different out of state, but in New York, I have a total asset protection. So in New York, all of my assets are protected. So I'm not subject to the 5-year look back. I can transfer the money, whatever I need to do to keep my lifestyle. I am not subject to the 5-year look back. Now, let's say I was out of New York in Pennsylvania and my wife went through $400,000. My first $400,000 would be protected, and the rest I would be subject to the 5-year look back.
Okay, so essentially you're buying a private long-term care insurance policy. It covers a certain amount of benefits, but then if it runs out of benefits, that's where the partnership kicks in. So it covers kind of the catastrophic risk, that tail risk, if it's a longer term event, correct?
Yes, correct. And a month and a half ago, I was looking at a nursing home event for my wife for the rest of her life, which would have been beyond a catastrophic event. It would have been a total financial wipe out of me for the rest of my life.
How old is your wife, roughly?
My wife is 51.
Wow. So, I mean, like when you need care and you're at that young of an age, again, you're going to want to provide that care for her. But again, that could last a very long time.
If my wife did not get better, which I'm very happy she did, I would have been looking at, she's got longevity in her family. I mean, we would have been looking at 30, 40 years in a nursing home.
Yeah.
And that would have, I don't care who you are, but I didn't have like 500 million sitting in the bank. That would have wiped me out. And after I would have been spending down to 125, and then the state would have said anything above 3,000, they're going to take. So let's say I went out and made $50,000, the state would have taken 15 for her care. So I would not have been able to have an enjoyable lifestyle. I would have lived at 36,000, and on top of it, you got to probably have about 3,000 or 4,000 to her just for her personal hygienes, so she is comfortable in the nursing home. So now I'm down to $30,000 a year before I'm off starting going. You really can't live on $30,000.
Yeah, and I think it's surprising to people. You buy the private long-term care insurance; it can be affordable, but how much extra does the partnership protection cost somebody to get in addition to their policy?
My wife and I bought it. Well, I bought mine long. The difference between when my wife and I got ours, she's had hers like 5 years and I've had mine 7. the difference between a partnership and a non-partnership policy for her, I think, was $140 or $150 for the year.
Okay, so it's a small extra cost. In some states, it's actually there's no cost. They're automatically partnership qualified as long as you buy the inflation protection on the plans,
Correct.
right?
Correct.
So it could be free to get partnership protection. It could cost a little bit of money, but it's almost nothing compared to the catastrophic coverage of having that tail protected. You know, if that happens to you, right?
Correct. You think so? At the end of the day, it's better to if you're out at if I was in Pennsylvania, it would have cost me the same. The plan would have been the same cost with the inflation protection. New York, it was about $180 more. So for $180, I've protected every asset if my wife went into the nursing home for the rest of my life. I mean, that's beyond pennies on the dollar. That's like super leverage. You're paying 1/1000% to keep everything you have protected, plus no 5-year look back.
And there's strategies where you can buy lifetime benefits. It gives you more flexibility than maybe a Medicaid qualified facility would. But if you don't need or can't afford the lifetime benefits, now you actually have a protection that can be put in place.
Yeah. So it's a win-win across the board. It's all about knowing the product you're buying and what's best suitable for you. Once again, it comes back to education, which empowers you, and you're able to advocate and make the right decision for yourself. And that's what I work with my clients for them to understand.
Well, thanks for sharing us this strategy today. We'll have you on future episodes, and appreciate your time.
All right. Thank you, Mark.